Actually, we should look at some of these stocks. You've got HDFC AMC, which is up on your screen. Look at UTI AMC. Just put these up stocks up. Nippon, we should pull up as well, and a bunch of others. Actually, even distributors. There's one large distributor which is listed, Prudent, which also we should pull up. The chart we should pull up. And of course, brokers, but the impact perhaps will be more on brokers, but in terms of the ones which are listed, I think most are on the retail side. Your sort of Motilal Oswal. Motilal, of course, has institutional broking as well, but in terms of trying to assess the implication for the business overall, because they've got so many other things as well. So pure institutional brokers who are listed, there aren't many. We'll be, by the way, speaking to Kotak Institutional Equities a little later, 9:15 maybe. That they'll be a good sort of a person to ask what the implication on the broking side is really. Nuvama 361. These are the other ones which we should kind of look at as well, because they also have a lot of distribution business. So have companies like Motilal Oswal, etc. Remember, this is, all this was, these proposals did come through a couple of years back. They didn't go anywhere. These draft regulations came, but they didn't really go anywhere. Now they're back on the table. These are draft regulations, but the general implication across the board is going to be of reducing earnings across the value chain. For investors, for you and me, it basically means lower expense ratio, lower TER, so lower costs of buying mutual fund units, but varying degrees of impact across the board with regards to the ecosystem, which is mutual funds, broking, and of course distribution as well.
So just to simplify this for our viewers, essentially two parts to this. What is the regulator essentially saying? The regulator is saying that when you talk about the expense ratio for fund, that expense ratio includes all the costs involved with managing that fund, including the fee that's paid to the fund manager, their expertise, the in-house research, etc. So then if you say that I have to pay 12 basis points as brokerage, because that includes research which the broker is providing, then that in effect is double charging for research, and that the regulator feels perhaps is not that fair. That's one part of it. The other part of it is making sure all the statutory levies, which is GST, which is CTT, which could be stamp duty, all of these levies now have to be X of the expense ratio. So it's very, very transparent.
GST is already X.
GST is already X.
The other statutory expenses are
part of the
They have to be separated.
Now they have to be separated.
The bigger implication for mutual funds is that a 5 basis point, which is that exit load. Let's actually bring in Ashish Somaya, who's with us of Vito Capital. We also have Sandeep Bagla of Trust Mutual Fund. Gentlemen, great to have both of you here. Good morning. Ashish, you're the man with all these numbers on your fingertips in terms of how the costs break up, because you've run the business and you are running the business. So implication across the value chain with what has been proposed now, if this were to go through.
So first up, Prashant, I was listening to you, and I think obviously the key takeaway is that for let's say you and me as investors and our viewers at large, it's really positive on two counts. One is obviously because mutual funds do have transactions and turnover. Buy-sell trades. And obviously, if you assume, of course, the cost incurred was not actually 12 basis points. On an average, it would be lower. But net, if they're saying that the cap is down from 12 to 2, a couple of clarifications. First, of course, it will reduce the cost of transaction, and to that extent, the alpha generated by funds, to that extent, should actually go up, because the benefit will go to investors. Second thing is that if you think of brokerage or whatever is paid to brokers as 12 bips, it's not entirely paid to brokers, because there are components like exchange fees and stamp duties and STT and so many things out there. So it's not like 12 becoming 2. It will be more like, say, as per the regulatory paper, if it was 10, it might become like 4, 5, 6 or something like that. It will settle at, because everything doesn't go to the broker. What the broker bills, there are further components into it which go to exchange and stamp duty and all those kinds of things. But yes, that will benefit investors. The second thing to keep in mind is that when you look at the statutory levies within the TER, other than this, So, like you rightly pointed out, GST on the management fee was outside the TER, but let's also understand that there are various other components of operating expenses that we pay. Depending on the size of the fund, we may be paying anywhere between 8 up to 14, 15 bips as operating expense. And that has, say, the registrar's fees, it has the custodian's fees, a lot of other operating expenses we incur. Everything has a GST component in it. So, for a moment, if I say that the OPEX is 12 basis points, you must assume that it is more like 9.5 plus 2.5, something like that. Because that 2 to 2.5 basis point of statutory levies, which is there in all the OPEX, that was also going from TER. So that has to be actually moved out. Then obviously one needs to wait for, further straightening out or, clarification on this. But there are other components in the TER also where there is a GST, which was actually hidden inside the TER. So net, lot of rationalization. And
What about that 5%, Ashish? 5% on...
5 bips.
I think that 5 on exit load, which you could charge, right?
Yes.
But that basically, it was not there pre-2012, right? So you're basically going back to that regime. It was introduced, I think, in 2012.
It was brought in when exit loads were removed in 2012.
Yes.
In lieu of that, it was 20 basis points and it was reduced to 5 basis points in 2018. And now it has been abolished. So how big a hit is that, Ashish?
Yes, yes, that's what I'm saying, that net, I think the TERs will go down. There is no doubt about it, because while the regulator has said that we are trying to remove all these components from the TER, and to that, so if that becomes ex-TER, then we are trying to reduce the TER and remove these components and make them TER++. But
is it bad for business, Ashish? That's the simple question. Now that you can't charge this additional 5 basis points and all the other, statutory charges have to go out of TER. I mean, if you look at the rationale the regulator has put out, it seems very clear, very clear. So I want to know how much is the expense ratio, GST, stamp duty, etc. is all plus.
Yes,
and
I think that...
Yeah.
Sorry. So you're right that at least that 5 basis points plus a bit more. So that will be, it depends what the AMCs take a hit and how is it shared with the channel going forward. But for the investor, I think the TERs will come down even after making all these adjustments of removing from TER, adding plus, etc. Net TER will go down. So the industry has to, figure out how to absorb that.
This is, gentlemen, I don't know if you agree, Europe has this MiFID regulation, right, which was brought about a few years ago. This is like India's MiFID moment. If this goes through, Ashish, you would agree?
Yeah, to an extent, it is looking like moving in that direction, especially when you talk about the cost of transacting and, brokerages, etc. But I think, over a number of years, what has happened is, as asset management companies' scale and size has increased, people have invested heavily into research, right? And not just the large AMCs, even, players like us, say we are more like 10 billion in size, but even we have a very large research team. At the same time, I would say that brokers don't just do transactions. There is definitely a lot of value addition, but I think we have to, arrive at some kind of working equation.
Okay, Mr. Bagla is also with us. Now, Mr. Bagla, you tell us, I'm asking a very simple question. Does this impact profitability? Will profits and margins for asset managers come under stress? That's the big question that shareholders of listed AMCs need answers to.
So, SEBI has proposed that what we charge, the total expense ratio, be reduced by 15 to 20 basis points. And lion's share would probably be reduction in distributor fees also. And some of the expenses like GST, STT, CTT are now allowed to get charged. So the impact will not be as much as the top line suggests. And it depends on how much distributor fees are also compressed by the AMCs. So in the short run, yes, there would be an impact in terms of lower fees when this goes through. But over a small to medium period of time, I think it will adjust. And if, looking at the growth at which the mutual fund industry is growing, I think we will see it as a small blip in the longer term.
Ashish, comment on this point. It essentially boils down to just this, right? How much can you compensate by lowering the distribution fee and the commissions, and how much can the AMCs absorb? Right now, I know it's very early days. If this goes through, Can 50% be absorbed and, the share is 50-50 between distributors and the product manufacturers? How will it play out? The hit.
So listen, I think, yeah. So I think that 5 basis points plus, that 10 to 15 basis points depending on slab. So let's say that net the regulator has spoken about reducing about, say, 15 to 18 basis points, right? And then let's say we benefit 2-3 basis points because a lot of the stuff which we're absorbing goes outside the TER. So I think, all told, if you really ask me, the industry has to contend with figuring out how to manage this. I think it will be 10-12 basis points, not more, which is what the knock will be. But 10-12 basis points is a significant number. And yes, within that, clearly, we have to arrive at an equation. Now, different players will have different equation with the channel partners, but it will have to be split. Because ultimately, if let us say on an average 60% is going to the channel partner and 40% is going to the AMC in terms of retention, then it's only fair that even the knock is split accordingly. So I think that will be the bare minimum. So ultimately, when you ask about AMCs, it will boil down to low single-digit basis points of impact.
Yeah. And of course, I mean, the larger AMCs will be better off. The smaller ones, upstarts, and a lot of new licenses, etc., coming in as well as they try and build up assets, etc. I mean, the impact will be more naturally. We'll leave it at that, gentlemen. Good perspective on this matter, Ashish and Sandeep. Great speaking with both of you. Thank you very much for joining us.